The market is down big time today. There are a lot of news articles out there. There's a lot of news in general out there. The port strike that's going on in the eastern half of the country. Iran is preparing to hit Israel, so oil prices are going crazy. We have jobs information that's come out. We have a lot more information coming out this week. We also have Nike that's going to be reporting earnings tonight. Guys, look at this heat map right here. You could see, and we talk about this, I've talked about this previously. If you look, Microsoft, NVIDIA, Apple, Google, Meta, Amazon, Tesla. Those are your, with the exception of basically Broadcom, those are your big movers. The Magnificent Seven. They've driven the market to the point that we're at. They're going to drive the market all the way down. So anytime you see big days in the market, these are your leaders. Anytime you see big down days in the market, these are going to be your leaders. I mean, if you look at the old FANG stocks, Facebook, Amazon, Netflix, Apple, and Google, and Microsoft, I throw Microsoft in there all the time. I don't know why that wasn't included. Those were responsible for 45% of the climb from 2014 through 2022 of the S&P 500. So what do you think is going to lead the market down? Let's come over here. This is the big news of the day, the port strike. So the union could not come to an agreement. It's been like 70-some years. The port strike stretches from Boston to Houston. You can see the tonnage in millions of stuff that they're shipping. So big in New York, Philadelphia, big in Norfolk, big in Savannah, Georgia. Houston, Texas is absolutely massive. You can see that it moves down to Mobile, Alabama, Miami, Tampa, Jacksonville, and then just all along the coast. So this is going to cost the American taxpayer $5 billion a day every day that it's not figured out. My solution would be just raise taxes. I don't know why you wouldn't raise taxes. That'll fix it. But let's see what we have here. If it lasts more than a few days or more than a week, you're going to have massive cascading effects. I do think that we are going to, if this lasts more than a week, we're going to start seeing supply chain issues again, which would this is probably the worst thing ever for the Fed, because this will just slowly start creeping up inflation again. But noting that 15% of the world's container ships could be caught in the stoppage. That's a huge reduction in capacity. It sure is. Let's see what else is out here. But a prolonged shutdown in Georgia, North Carolina, and other major ports in the East and Gulf Coast would increase American sense of economic unease after negotiations stalled. Okay, so basically this guy is getting into what would happen with the election. Who knows? I don't know. So let's see. Oh, they want the president to step in. Okay, well, I'm sure he would be very effective in that. Let's see what else we have. Let's go to the stuff that's going on in Iran. So oil, if you notice this morning, crude, you can see it's up 3% right now. Crude is up 3%. Gold is up about 1%, which makes sense. Chaos leads to gold going up. So oil surges. Iran is preparing to launch an attack on Israel. Guys, doesn't seem like it's going to end anytime soon. You can see here, $70 a barrel after earlier slumping as much as 2.7%. The global benchmark of the Brent climbed to $73. The U.S. has indicated that Iran is preparing a strike against Israel imminently, according to a senior White House official that could not be identified. It's funny how they never identify themselves, but they have all this great information. Guys, when it comes down to this stuff, you can't just, this is all intermediate stuff, right? Yes, it sounds really bad in the moment, but in the end, it shouldn't change the way that you're investing. Maybe if it comes down to oil prices and you love investing in oil, maybe this is not a great opportunity. Or maybe you bought in as oil has slumped so much over the last 6 to 8 months. Maybe you were buying at those lows. That's the way to do it. When it comes to the port stuff, if you look at shipping companies like Zim, they're getting absolutely decimated today. I think they're down about 8%. I'm not saying go buy Zim, but maybe that's an opportunity to go and look at that kind of stuff. You're probably going to have big box stores like Costco, Walmart, Home Depot, Lowe's that are going to feel some of this. Stock price falls, maybe it falls into your value range. I don't know, but these are opportunities that you can use. Don't look at this and say, oh my God, the world is ending. We're never going to be able to do anything again. No, it's going to resolve itself. Go back to COVID. We had major supply chain issues. Did it take time to get back to normal? Yeah, it did. Are we at normal? I don't know. We're pretty close to it. Remember the chip stuff? Guys, they couldn't build cars because they couldn't put semiconductor chips in the to move your seat around. My truck, I bought a new truck. It's 2023. It doesn't have a heated steering wheel. It was supposed to, but the chip isn't there. So these things, everything comes back eventually. Look at this as an opportunity to buy if it's the sector that you like, if the stocks that you like are being depressed for some reason. Now, let's come over here to talk about the jobs information. So fresh jobs and manufacturing data kicked off the new quarter as investors search for new clues so everything is just about the easing cycle of the interest rates. Oh my goodness. Job openings surprisingly increased in August, furthering the narrative that while the labor market is cooling, it's not rapidly slowing. New data showed that there were 8.04 million jobs open at the end of August, an increasing number from the 7.71 million seen in July. So, if we look at PMIs, the manufacturing data, unchanged, 47.2%. Okay, let's see here. PMI below 50 indicates contraction in manufacturing, but it remains steady. So Friday is the real number. Friday is the real jobs report number. This is going to highlight what's going on in the market. This is probably going to get people really excited. Let me pull up the Fed Watch tool here. Let's see what we have going on with the CME group of where people think markets are going. The next meeting is over a month away. So, and I'll be damned. So we look at this, guys. There is this is the market predicting where things are going to go at the next meeting. 59.6% chance say that we're going to get a 25 basis point cut. 40.4% say that we're going to get another 50 basis point cut. 0% say that we're going to stay the same. So the market thinks that we are going to get some type of interest rate cut. The majority, about 60% right now, this changes second to second. 60% say that we're going to get a 25 basis point cut. I think it's going to depend a lot on this port strike issue that's going on, and I think it's going to have a lot to do with the jobs numbers that are coming out. So those are a couple of big highlights for the week. Another huge highlight for the week is it's kind of sneaking up on us, earnings season again. Nike is reporting tonight. So Nike is reporting tonight. This is going to be a big one to see where retail, they're a retail leader. Let's see where retail is going to be going. And then if we look into next week, I just want people to be aware of this. Pepsi reports on Tuesday. Delta Airlines is going on Thursday. So earnings season is approaching very quickly. It just feels like this just happened. But here we are again. Nike is going to be the big focus. So tonight we're going to be doing a video on Nike. It's either going to be on the main channel or it's going to be on the 24/7 channel, but look for it. I'm going to go through a big analysis of their earnings report, and we're going to see what happens with Nike. So if you like quick reactions to the news of the day, the earnings reports that are going to be coming out, subscribe to this channel, guys, and I will see you later on.